pump it up. You got to pump it up, don't you know? Pump it up. You got to pump it up, don't you know? Pump it up. You got to pump it up, don't you know? Pump it up.
Alright, what's up everyone? RZ's back with another video. Today what you're going to learn is market structure and how you're going to use it the right way. So in this case, what it is when it comes down to market structure is why is it very important, and how you can start applying this today is that when you use it the correct way, you can 10x, 20x, or maybe even 50x is by increasing your portfolio. Okay, so this is what I've taught for 3 years now, and this is just what has helped me and what has helped my students. All right, so you have to know there is 3 types of market structure. There is uptrend, there is a downtrend, and there is a range. But so yeah, let's get onto my chart and let's just do some drawings. Okay, so what we see on the left hand side, all right, and again, you might have seen this on other videos or other YouTubes, but today I'm gonna show you the much more simplified version, and let's cut to the chase. So we have an uptrend, higher high, higher low, higher high, higher low, higher high, and higher low. Okay, this is just what it comes down to, an uptrend. Okay, and you can see this on a chart. Okay, you can see this on a 1 minute, you can see this on a 5 minute, you can see this on a 30 minute, you can see this on a 1 hour, you can even see this on a weekly time frame. All right, this is just what it is and how you can read price. Okay, so when you see higher highs and higher lows, that is just where you see an uptrend being created and a rally being formed. And now the opposite of uptrend, what is it, right? It's a downtrend. Okay, so in this case, we have now a new lower low, lower high, lower low, lower high, lower low, lower high, and a new lower low. And so we call this a downtrend, right? So now that is 2 types of structures. But now the third one is the range. Okay, this is the range structure. So we have equal highs, equal lows, equal highs, and equal lows. Okay, but you have to realize that each higher low or each structural point has a meaning behind it. The meaning behind a structural low on an uptrend is that it's demand. And so what do we mean by demand? Okay, demand is just meaning that there is buyers at a certain price, but based off market structure in this uptrend, there is buyers trying to take price up. Okay, so that's just where you see buyers buy at specific areas to continue in that upside move. So every single pullback that occurs is where, aka buyers, retail, banks, dumb banks, want to add in positions to go right back up because they believe that this is a nice discounted price, and that is just where demand increases to continue going up. So that is just demand. And now on the other side, which is the downtrend, now this is supply. Okay, so within the supply, every single pullback that meets a new downward fall, that means there is enough supply within the current price and no one's interested. No one's interested in that price, and so they sell off. Okay, because why do they sell off? Is because they take profits and they want to meet new lows. They want to see a downtrend. So on the supply areas, that is where you can also make money when the market falls. So we have supply here. Okay, so there you go. And now the range structure is you have a mixture of this uptrend and this downtrend. So you have now demand at the bottom, which is right here. Okay, so that is demand and this is supply. Okay, so you have a supply. So you have a supply here and demand down here, and this is what we so-called a range. And so we can just do all this together, and we have that uptrend and we have a downtrend. Okay. And let's do this. And here as well. And so in any type or any of these three structures, you can either be a buyer or you can be a seller. So on the right hand side, you can be a seller, but you're short in the market, and you can make money when you short the market. But now if you have a question about that range, which is down here, just like what you did on uptrend and downtrend, you can buy at the demand areas, and now you can sell at the supply areas. So you can buy here to get a bounce, to see what? Hit a supply, to now short from here to here. And now you can buy here to short here to buy here, and now to buy here to short in here the moment that price hits that supply area. And this is just where you can make profits on both ends. So you can be a buyer and a seller, right? So these three types of structures you can see in every single stock, every single crypto coin, in any Forex pair. But the most important thing here for you today is to understand on how you can apply this on an actual chart. So let's just do Euro USD, for example. Okay. And so we're going to spot all these three, and we're going to go onto we're going to go on Euro USD on a 1 minute time frame and see how many times can we look for this. So let's delete all this and let's go back in time. And yeah, let's just try to click anywhere. Okay. So let's do that. And what we're going to do here is just, we're going to see on, of course, past data. And we're going to just see which ones are an uptrend, which ones are downtrends, and which one is a range. So let me just fix this chart. So let's do this. So there you go. Okay. So let me minimize myself. And there you go. So now, what do you see on the left-hand side to the right-hand side? You see on the left-hand side that demand started increasing. And we can look at the demand here, and every single box that I draw out, that is demand. Okay. That is just where buyers are buying this up to see higher prices. And we'll pretty much just connect the dots together. Higher, low, higher, high. And there you go. So now we have demand taking price higher, pulling back, higher high, higher low, 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 and higher high. So of course we see an uptrend. And within this uptrend, we can now see what? A downtrend, right? Because that's what we see on the right-hand side. And so in order for an uptrend to fail and to start seeing a reversal, a higher low has to be broken. And where does that higher low has to be broken is the moment that if this was that last high that has been created, where did it come from? And where did it come from? It came from right here. Okay. So now we want to see something like this. Higher high, higher low, higher high, higher low, higher high, breakthrough. Boom. Now you have a new low. And so now within this new lower low, we pull back to meet this. And now you have a reversal, because now you did not just break once, but you just broke twice. So there you go. And now this is the breaker. This is the break of a structure, and that has shifted every single thing. And now demand is weak. Demand is weak, and now supply is strong. So let's do this. Lower low, lower high, lower low, lower high, lower low, lower high, new lower low, right? So we have this break, we have this break, and now we have this break. And we can just pretty much just label every single thing here, okay? So higher high, just like that. Higher low, higher high, higher low, higher high. Okay, and why is it very important when it comes down to market structure, or why is it very important to learn? Is just because this will help you create a bias. This will help you find good entries. This will help you find where to exit. This would also help you how you can risk your positions, how you can position yourself in this market and bet where it can be the next move. It's either to the upside or is it either to the downside. So in this case, we have now a lower low, because now it's this right here, the moment that price breaks below this, it's not called a higher high here. It's now a new lower low. Now we have a lower high. We have now a new lower low. Okay, lower high, lower low. And you can see that price is holding those previous lower highs. Did price ever break above here? No, it didn't. Made a new lower high, new lower low. Did price come right back up in here? No, it didn't. And it still held that downtrend. So let's continue. Now we have a continuation right back down. Lower low, lower high, lower low, lower high, lower low. Come right back up. And we can label this out again. Lower low, lower high. So let's put that here. Lower high, lower low. And you can just see on how simple this is. And if you practice this tonight, you will start seeing that you are going to start seeing major changes the way that you see these charts. 100%. And once you do, come back to this video and comment that RZ you to go. No, I'm kidding. But hopefully that, you're going to start learning something, and everything that you see now within the markets, it's going to start making sense. So this is the new lower low. And now we have a lower high right here. Okay. And all we're doing is just follow within price. And there you go. Just continues and continues on to a run down. All right. So let's just see what this was. And now we have what? Supply. And we have demand. Okay. So in this case, we have what? We have some sort of range, just like what we talked about earlier. We had this. Okay, that is the other types of structure. Yeah, it meets a new lower low, comes right back up, breaks structure, comes right back down, meets this new low again, meets this area in here, comes right back down, meets this higher high, higher low, higher high, and then shifts right back down. So there's like really stalled price in here, not moving. Okay, it's not moving, it's just going back and forth. So we are holding supply and we're holding demand. And so in this case, we can do something like this. And again, just like I mentioned, you can short here, you can buy here. You can short here, you can buy here. You can short here, short here, short here. And there you go. This whole area held and rejected and continue going lower. And so within that last rejection right here, what did you have? And so in this case, what I would have wrote in my notebook is that this supply zone has been rejected not once, not twice, but 5 times, right? It rejected 5 times. So within this rejection, now that if I see a downtrend, that is just where I can start considering on entering, because buyers are having difficulty on taking price up higher. So in this case, we have high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. And there you go. And so when it comes down to a range, you don't have to trade these ranges. You could just wait for either for price to push up or to push down to pick a direction. Remember that. You don't have to trade these ranges. You could just wait for price to break above or break below to see, the direction where it wants price to head to. And so in this case, it shows what? A downtrend. So now you've seen 3 examples of those 3 types of structures, which is an uptrend, which is a range, and also a downtrend. So those are the 3 most important structure types that you want to learn and spot on these charts. Because once you master this, I'll guarantee you, you're going to start seeing a major change within the way that you trade. You're going to start seeing an increase in profits, and you're going to get better. But hopefully you enjoyed this video about market structure. We kept it simple, and make sure to practice this. Make sure to see how you can do this on a live trade account, if not a demo account, and let me know how that goes in the comments. All right. But other than that, and I'll catch you on the next video.